there's many reasons why people would get an SBA loan, and I want to walk through a lot of those. I know three of the biggest ones, or even four of the biggest ones that I can think of, are real estate, equipment purchases, working capital, and then acquisitions. So let's look at that first one, real estate, because I think most people are familiar with purchasing real estate, maybe in the form of a home. What does it look like on the SBA side if we're going to use that to buy a commercial building, a warehouse, a shop, whatever it is? What's the process like? How can we use it? What are some of the ways that we can use the SBA for real estate?
Yeah, SBA is a great product. And I want to clarify, when you say real estate, it's owner-occupied real estate, right? Meaning 51% and more has to be occupied by the operator, right? And that's how it falls under that bucket. So, and then on the owner-occupied real estate, there's two main products. There's the 7A and the 504. And the 7A, it's a one loan. You work with the bank to have that product. And basically the benefits is you can get up to 10-15% down payment requirements, 25-year amortization payment, and then no balloon payment. So going back to your question, Khalil, earlier about flexibility, well, I mean, as business owners, sometimes, you come across opportunities and maybe you don't have the cash really to buy that property or that building that you wanted to buy at that time, because, typically at conventional, we require you 20 or 25%. Then boom, then you can use SBA, because today you only have 10-15% to take advantage of that investment as a business owner to buy that property. And you can buy an existing building, but you also can grown up construction. You can, hey, I want to find a land. I want to buy a piece of land and build a warehouse office to move my operations. That's a great product. And the 25-year amortization is a big deal too, because like Martin, like you said, cash flow, that will help them on a cash flow basis. And then the balloon payment, no balloon payment, it's also a big deal, because on a conventional side, typically you will structure it where, it's a 10-year term and a 20-year amortization. Well, when they get to that year 10, they're going to have a balloon payment, and you have to refinance it, and you have to underwrite it, and to continue that 10-year note, right? Oh, in the SBA, you do it. It's a 25-year note, and then that's a big deal, right? That's a 7A. And then the 504, that's the other product that is very popular and very similar, and without going through all the details here right now, very similar, 10-15 down payment requirement, but you have two loans. 50% of the loan will be on the bank, and then a 40% loan will be with SBA. So the exposure of the bank will be only 50%. So sometimes, like if a borrower has a special use property, or maybe the bank doesn't really want to do the 90% loan to value, well, the 504 may be a good fit because they're only taking the risk on 50%, if that makes sense. But so
what would they be taking the risk on the 7A?
Well, the 7A will provide the guarantee. The 504, it will be a loan, just 50% with the bank and 40% with the SBA. So the risk really is only 50% if they have to liquidate the asset.
Right.
Yeah.
Okay.
Gotcha.
And just in passing, are this 25 years fixed? I'm smiling. Or what are the interest rates generally? You don't have to give a number right now, but how is it fixed, or is it something plus prime, prime plus something, or?
Yeah. So the terms, it will be depending on the bank, but typically it will be, you can go up to 15-year fixed. They have to be priced on Wall Street prime plus a spread, right? Cashin, correct me if I'm, go ahead.
Yeah, or minus. I mean, it's
minus,
so the pricing on the, let's talk about 7A pricing. Gonzo's right. It is quoted as a spread to Wall Street Journal Prime. That is a requirement per SBA, assuming it's not fixed for the entire term. If it's fixed for 10, 15, or 25 years, then it's just whatever rate the bank quotes you based on their internal cost of funds. Otherwise, if there is a point where the rate will adjust, And you'll see most banks fix their rate on real estate for increments of 5, 7, 10, or 15 years. Now and then you'll see someone do 25-year fix, but it's going to be a much higher rate out the door. So it just depends on kind of where the borrower wants to come in. Obviously, the shorter the yield curve, the lower the rate. Well, that's historically the way it's been, but right now with this inverted yield curve, it's actually better to do a little bit longer fixed. We're seeing the most beneficial pricing today in that 7-year time frame. That seems to result in the lowest cost of funds for the lending institution, and that translates to a lower rate for the borrower. But historically, when it's a normalized yield curve, you could come out with maybe a 3-year fixed, at like 5% versus a 25-year fixed at 8%. So it just depends on where the yield curve's at any given point.
But you don't renegotiate the note, rewrite it, or amortize it, like make a balloon out of it, go again. You just change the rate.
When the variable rate period or the fixed rate period is over and it's time to
Fixed
fix
rate
it again
ends.
for the remainder of the term, yeah, that is
Yes.
renegotiated at that time. But to Gonzo's point, it's not a new origination. It's just all right, you've had this rate fixed for 10 years. You hit your 10-year anniversary. Let's see where the debt capital markets are today, and we'll refix it for another 10 years at the prevailing spread to prime.
Gotcha.
That's not a refinance. Okay.
And now the 504 is a little different. So the bank can price however they want. And that's going to be different from bank to bank. There are no rules per se on the bank's pricing, but the SBA, the 40% on the 504 is going to be a 20 or 25-year fixed rate note for the entire time. And that's typically going to be well below market as well. So that's why on paper, the 504 can look really attractive from an interest rate perspective for a borrower.
Very interesting.
Well, I've got two other quick questions. If you're building SBA, this will include a construction loan that converts to a fixed loan. I mean, you don't have to go get separate financing. They take the whole process all the way
Yeah,
through.
it will be a draw note. Basically, you are allowed to draw as you go until you complete it. Certificate of occupancy is done, and then we'll term it out at that time for that note that was approved